Good afternoon. Thank you so much for joining us. One of the sessions in the afternoon about blockchain, digital assets. This is, for me, the third time. It's great to be back. It has changed so much the last 12 months from, with surviving the crypto winter. It's now more stable. I think everybody's hoping for even an explosion of the crypto asset this year to the emergence of digital asset regulated business that infrastructure providers like exchanges, utilities are working on these infrastructures, and the regulators are working also to issue a license. We saw the first digital asset banking licenses in Switzerland issued to 2 banks. We saw the announcement of Libra, the foundation coming up, which generated a lot of pushback. But on the other side, the central banks now are working on their central bank digital currency projects. There was a big announcement last week, so there's a lot of movement because everybody realized if you digitalize the asset side, if you want really a risk-free atomic settlement, you need the cash side too. So that's happening also, and there's much more also on the regulation side, etc. Everybody's working on that. So much has happened last year, and then I think I'm thrilled to have such a great panel of expertise today, very diverse from a diversity point of view about the different topics. And what I'd like to do is I will introduce the panel now, and also ask my colleagues here on stage to really share your insights, because everybody has a special topic, and the value of discussion is, to me, is to share, what will happen, what's the probability, what's your learning, what could be the obstacle, etc., across the topics that I already explained. So maybe we'll start with Elizabeth, because I think you're the CEO of AZA. I think former big Penzer, well known in the business in Africa. Maybe if you introduce yourself and a little bit about your business and what you see coming from your perspective.
Sure, thank you. And okay, so I started my company 7 years ago. We were the first company in the world to trade digital currencies with mobile money. That's why we were originally called BitPesa. We did Bitcoin to M-Pesa, which, for many of you might know, the Kenyan mobile money that kind of started the revolution into e-money. And as we evolved and we opened up subsidiaries across Africa, we got the first license, not in the sandbox, but directly from the Financial Conduct Authority in the UK in 2015. So the first authorized payment institution to be licensed to do Bitcoin transfers. And then later on, we purchased a company in Spain that's PSD2 licensed. And now our business has evolved into AZA. So we still have the BitPesa product, but we also do B2B2C currency transactions, which means we process foreign exchange, treasury, and settlements for remittance companies, corporates, fintechs, even tier 2 banks, anybody that needs liquidity and settlement between Europe and Africa, Africa and Asia. And 7% of our volumes still use a digital currency as a middle currency. But as we expanded our infrastructure and we got more and more licenses on 3 continents, sometimes we don't need digital currency in the middle. And as an early advocate in this space, and I'm the co-chair of the Blockchain Council at WEF in the World Economic Forum, I feel comfortable saying sometimes there's a use case and sometimes there's not. And I always used to say we're not a Bitcoin company or a blockchain company, we're a company. And we're very attuned to being efficient and a going concern, and we use it when it's necessary. And I think there's a lot to be said this year. We can chat about the evolution of the space, but most importantly, this is the year where we're hearing top governments, top regulators, top CEOs all want to suddenly use the term digital currency. Now, just 24 months ago, 18 months ago, it was just blockchain. And if you dared to say the word currency or digital or, God forbid, cryptocurrency, everybody's eyes would glaze over and they say, that's like so 2016. So I think it's been really cool that that's coming back into the vernacular. And a lot of the stuff that happened last week in Davos, which I'm happy to share, is about using this terminology and coming to terms with the fact that there is a use case sometimes.
Okay, great, thank you. Yoni? You, as the CEO of eToro, I think this is the second time also at Paris Fintech. So introduce yourself and what do you see, what's the big topic for you and your business this year?
So first of all, I'm the CEO and founder of eToro. We're the world's largest social trading network where we have 12 million users who can trade commission-free stock trading from 17 exchanges, as well as commodities, currencies, and cryptocurrencies in a social network where everyone can see what everybody's trading and automatically copy top traders from all around the world. So we've been very lucky to be early on to Bitcoin, one of the first regulated financial institutions to offer Bitcoin trading. And nobody really traded Bitcoin in 2013, 14, 15, 16. And then suddenly in 2017, we saw sort of all the range of Bitcoin from $300, from $200 to $20,000, and that's a very nice range of an asset when you're a trading platform. And we added Ethereum when it was in $8 all the way to $1,400. So we really saw the crypto rally in eToro. So we saw within a 6-month period the number of funded accounts in eToro per day grow by 100 times. So we really saw the crypto rally from inside. And then we felt very nostalgic during crypto winter. We really hoped for that to come back. We still do. But now, sort of, we went out of crypto winter. So we look at crypto as an asset class. I think it's an interesting asset class. I think it's a generational asset class. It's here to stay. I'm long Bitcoin. And we see customer interest around it. And now we're sort of out of crypto winter. We still see customer interest has grown 400% from Q1 last year to Q1 this year. So we can actually see how customers react to volatility and price fast. And we're also very bullish on blockchain as a technology for the sort of future of financial services. So we've issued 17 stable coins. We've built our own issuance platform. We've built a crypto exchange where we make both crypto assets and our stable coins. So we are very big believers in the future of tokenization, and that 10 to 15 years from today, we're going to see a significant part of digital wealth transforming into blockchain assets.
Very good. Thank you. Bernd, from your perspective as the CEO of solarisBank, so where's the hook into blockchain and the crypto and digital asset business?
I think it's very simple. solarisBank, basically, we're a B2B provider of financial solutions. So anybody that would like to include a financial solution in your ecosystem can do that via the Solaris platform. We center our services around an account and a transaction, and normally a KYC service comes around with that, a credit product or a payment solution. And I think the interesting area from a growth perspective is the blockchain area. We started that about 2 years ago. So we built the bridge between the fiat world and the cryptocurrency or stable coins or security tokens or utility tokens. Anything where I think you need to combine a digital asset with the traditional world. This is where the Solaris platform can help you to implement that.
Any prediction for hot topic for you this year, blockchain related? What do you think that?
Yeah, of course. We, in December, based on the new regulation, we launched our custody subsidiary for solarisBank digital assets. And I think the key mass trigger factor will be when you don't have to deal with private keys anymore, when you can include any type of token in this little item here, very convenient, and you have a trusted partner that will keep the asset for you. So I think it's actually more than an asset class. If I look at one of our clients, Bitwala, a fantastic company, has a general full account with full account services and then the trading component into 2 of the cryptocurrencies. But the nice thing that is it makes the currency usable on a day-to-day life. So you can use it and spend money on it, and you immediately get your refinancing then done via the trade of a Bitcoin, for example.
Very good. Thank you. Martin, as the CEO of Upvest, So what's after so many ICOs, billions of money invested in blockchain-related startups, I think 90% what I see of those startups are not anymore with us, I would say. So the whole investment community or venture capital community went also through a learning curve. It would be great to hear you're introducing yourself and any insights that you have.
Yeah, so my name is Martin, the founder and CEO of Upvest, and we are the leading infrastructure provider, at least in Germany and Europe, for blockchain assets. So we started 2017 and were involved in a lot of ICOs back in the days. So we have seen pretty much the hype and also how it fell down. And we developed out of this quite a unique key management system, some fee APIs, some data APIs. So if you want to build something on a blockchain, pretty much you come across some of the APIs that we provide. We have around 20 business customers. The largest in Germany are eToro. Also, Bitwala is one of our customers in that respect, which is a funny coincidence. We have around 80 countries that use our APIs worldwide. Sometimes just developers that play around with this, sometimes more mature companies around this. And I think what changes in the space is really it becomes more professional. It's not about blockchain companies. It's really about I have a company, I use blockchain to optimize something or to make more revenue or to cut costs. So we don't present ourselves as a blockchain company anymore. We present us as a software company, and we use blockchain to create real-world benefits.
So I think this is a good start because I think we can deep dive into the different categories. And I like to start first with a small framework because my experiences in talking to a lot of decision makers or in the industry is there's still confusion about what is a payment token, what's a utility token, what's an asset token. Because the discussion that I have, and I'd like to hear also your views on that, looking at the different frameworks from the regulator is, if I look at the discussion that we have now with the digital asset, which are usually security and asset token that are fully regulated like a security, you need a license to do that, you need to follow the prospectus, so you have obligation, etc. That's something now building up. If I look at the payment topic, we have the payment token that also started with Bitcoin or with other stable coins, and now we have the race. And I will first look at you, Elizabeth, the race between peer-to-peer stable coins coming up as a project for digital currencies versus central bank issued, government issued currency. I think the Libra token was for me the typical competition between something that the industry, the private companies bring up versus something like that. And then, the utility token, which was, the hype around, I can use this for specific services. Let's start with the payment topic, because as you said, this was a hot topic in Davos. It's a hot topic since the Libra Foundation came up, and so much activities on the government and then also on the stablecoin side, etc. Maybe you can give us what are the key takeaways out of your discussion out of Davos that how the different governments try to approach that. Are they working together? How are the private industries working on that or not?
Okay, that was like 50 questions, but I'll summarize. So first of all, the difference between the tokens completely depends on the jurisdiction.
Yeah.
In every jurisdiction, if it's Anglophone law, Francophone law, Asia, US, it just depends. In some places, like what Bussmann has done in Germany, it's just not the same in the UK. So that's number one. Number two, I think Bitcoin, I'm also long Bitcoin. Bitcoin is an asset, but for us, since it's so liquid, we use it as a means of settlement. Mm-hmm. So in this situation, you can have something that most jurisdictions or many jurisdictions consider an asset or an asset class, and that you can use it as a means of payment. Because in the end, to use something for payment, it must be liquid. So if it's not liquid, who cares? I would use this table as a means of payment if people accepted tables as in cafes all over Paris. So I think, that's the biggest problem we see with all of these tokens, and with Libra, which is an idea still, is none of them are liquid. And when it comes to the end of the day, there are, eToro knows better than I, there's just a handful where you see real liquidity. And any kind of token that doesn't have real liquidity, suddenly you have slippage. Yeah. So when we started our trading, we had a lot of demand between the Kenyan shilling and the pound sterling. And the problem was there was no liquidity for pound sterling on and off ramps. We were providing instant Kenyan shilling liquidity pretty deep, but anytime you wanted to enter or exit in pound sterling, there would be just one or two exchanges who could sell you, like 1 or 2 Bitcoin, and then all of a sudden the price would go up to like 5 or 6%. And then what's the point, right? You're better off sending a SWIFT, a wire. So I think what's interesting now is we do have liquidity in a certain amount of tokens, and what has been happening on the international stage, especially with China and the PBOC, is that the People's Bank of China is saying we will make deep liquidity in a digital currency, a central bank issued digital currency, the ERMB, or whatever this looks like when this comes out, and it is coming out. And that's exciting because no matter what you want to categorize that, there's built-in liquidity there. And all the banks will work with that, and that means you can cash in or cash out. So imagine we would have, 25 Solaris banks or more, cashing in or out with that liquidity, that suddenly becomes very attractive. And so when you have that central bank digital currency, if the liquidity is guaranteed, it's way more attractive than if you have a corporate. And I think what was so exciting about Libra, or the idea about Libra that brought it to everybody's tongue, is everybody uses Facebook all around the world, the liquidity is there.
Are you bringing this from Davos, that the ERNB is coming out in 2020?
Well, I'm bringing it out from the announcement they made in November out of the PBOC that they're doing 200 enterprise blockchain topics, and they are piloting and almost ready to go. So just directly from the PBOC that came out November and December, not from any sort of direct comment. But I think that's the potential liquidity of Libra and the potential universality started to freak everybody out. And that's when central bankers started to say, wait a second, if Jeff Bezos decides to do Amazon coin, everybody under the age of 25, maybe 40, wants to live in Amazon land, right? Imagine the other side of that, never having anything delivered. Yeah. So all of a sudden you think about the universality and the liquidity of a private coin. And I think then you see the central bank governors step up and say, well, we want to make sure that we have control over monetary policy, et cetera, and therefore, it's important for us to create a liquid coin.
Is it something for 2020, or are we talking about 2-3 years to go?
I'll be very pleasantly surprised if we see CDBC in 2020, because I think it's a big game changer. There are a lot of questions
even
there.
In China, even for.
The question is, when I say a central bank digital currency, I mean that retail people can actually take it. Because if it's only 10, 20, if it's 200 institutions, there's no real difference than the digitization of that and how they bank right now with the central bank. If a retail consumer holds a digital dollar or a digital yuan or a digital any currency, that's a big milestone, in my view, of human history. And that has implications to basically all of the financial system stability, right? Because the entire banking industry is based on the fact that you put your deposits in the bank because you trust the bank, and if you don't trust that bank, you'd move it to a more trusted bank. There's, by definition, the most trusted bank is the central bank. And the biggest and scariest thing around Libra or any type of big, large-scale stablecoins is bank run, right? So all the consumers saying, well, we'll take our money out of the banks and we'll put it in Amazon or Facebook, and the entire system collapses. But the exact same thing is correct to CDBC, right? So if everybody would go to the banks, pull their money and say, hey, I prefer to have my account directly in the Royal Bank of England, then there's no more lending, which means all of the businesses close, real estate drops by 95%. So there's a very interesting, very complex play here, and I don't see how it plays in 2020 to the point of enabling it and just opening it for everyone, which is the nice opportunity for Bitcoin to capture.
And that's, I think, the intermediaries. Like, there already are intermediaries. Nobody wants all deposits to be held with a central bank. That's what actual banks are for. But I think what's interesting about the China project, or at least the details that have come out, is that it's like the central bank and then all of the banks and then potentially Alipay and the payment companies. And you got a pretty big chunk of the global economy if that whole ecosystem goes on.
So I think going back also to you, Roland, from demand for custody solution. They expect also brokerage. You know, with the German government now also pushing, you know, the laws also that, you know, you can digitalize bonds, Bund front, the German Bund. And do you see demand for more, sorry for saying, crypto asset related demand, or do you see already, you know, this regulated digital asset topic, you know, looking at your infrastructure services?
Yeah, look, I think there's a lot of entrepreneurism and innovations out there, and people having ideas about assets that they would like to digitalize. Now, the how is one of the key questions that, from a legal perspective, needs to be resolved. But once you have that question resolved, I think then it's a matter of how do you store it? How do you issue it? How do you trade it? And there, I do think we still have some breaks, particularly on the trading side. I think that was referred to already in the panel before. I do think any of those assets that will be generated, the key question of success will be who's the market maker, who can supply demand, and particularly when there is a significant amount of sellers, who will be able to then make sure that we capture the asset at the end of the day and have a real value behind that.
And the wallet, like you said, the custody, that's huge. No one's talking about that.
Well, the custody, I think, from a German regulation perspective, tick. You know, BaFin has laid out the regulation for custodians, and obviously we have applied, or we will apply for one of the licenses by mid of the year. Right now, with the grandfathering, we can continue with what we're doing, but ultimately, everybody that will store digital assets will have to be licensed and regulated by BaFin. So that is a real positive, because it gives a lot of legitimization to any of the digital assets that are on storage. Still, the question then of trading and obviously integrating in any type of liquid ecosystem, that's one of the key challenges.
And I would say also the whole standardization of these new assets now, you know, how an asset is being described as a smart contract, you know, what's the way also that you can really not only trade in one jurisdiction, not because it's all about the global ecosystem.
And if I may add, you know, you will see the biggest innovation you will see where the transaction costs are high, because and that typically is obviously on the property side, where you have tremendous cost of buying and selling. That will be disrupted at some point in time, and you will see those margins coming down very quickly. If you look at bonds and equities, the margins aren't that high, but they're still high enough to be disrupted. You can look at many other industries that, you know, 10 years ago had decent margins, and over the course of 10 years they have been destroyed. So you will see a continuous flow of disruption in any asset that has high transaction classes. They will be tokenized, they will be put into digital assets, they will be stored, they'll be traded very efficiently.
Are you involved in any, Martin, also, you see this also from, you mentioned 300 million under management. Do you see that also, this kind of demand?
Yeah, certainly it starts in real estate, because there the transaction costs are high. You have issuance costs of 25K per security just for crowdfunding, which is far too high. You have depository bank accounts, which cost 40 to 50 euro per retail client. When you have an average investment, let's say, of 1,000, 2,000 euro, this eats already the entire margin. And we see this with Exporo, a good example, that they actually can save around 70–80% of banking costs already today by using, let's say, the blockchain stack that we provide. I'm not a big fan, let's say, on private equity and venture capital tokenization, because it's very hard. Limited partnership agreements are very hard to tokenize. I would also say public markets, it will take a long, long time, because everything runs super smoothly. But if you just do real estate, the next 5 years is a big enough market. It's like, I think, 210 trillion globally. And even when you have the land registry, it's at a certain point of time on the blockchain, then this gets super exciting. It's not a market that you trade every day. You know, when I buy a house, I don't want to trade it next day. But just the option to sell it is super valuable, because sometimes I have liquidity constraints. Sometimes eventually I want to take a small margin out of this. So I would bet that in blockchain asset tokenization, the next 2 to 3 years will be mostly real estate.
And that's always an opportunity, by the way. So that's how the trading
my next question,
works.
because I think looking at the whole tokenization.
We talked behind, like, I would love to take real estate and put it on eToro, right? It's just a time till we do it. And by the way, personally, if you want to sell an apartment because of liquidity issues, means you're willing to sell it cheaply, then I'm willing to buy it, right? So, and that's market making.
Yeah.
So that's why potentially that could work if you build a network of buyers and sellers.
Would you go, because right now I see two challenges. The one is setting up the infrastructure, and then because as is a regulated business, as Roland said, is to get the license. Would you go for a license?
First of all, we are very much regulated. We have licenses in Australia, UK, Europe, US, and South Africa. So
Also for
any more licenses...
I'm not talking about the payment, but I'm talking more on the security business. Is that something that would...
We're selling securities. So
okay.
if he gives us either a security or a non-security, we're allowed to sell it.
Okay,
whatever you want to sell, we're allowed to sell it.
You're in a perfect spot.
but that's the issue is really liquidity. You need to create either market makers willing to take risks, so somebody willing to say, I'm willing to buy real estate and sell real estate, even if I don't really want the real estate because I know how to buy cheap and sell high, and gradually build a network of interest, of finding people in 90 countries who want to buy real estate in Germany because these are people who are selling the real estate for cheap. So building that network will take time, but I agree with them. It's an inevitable process of real estate, inevitable process in art, hopefully, in a lot of different types of rights and physical goods.
Let's talk a little bit about the regulation topic, because that also is beefed up the last 12 months. Elizabeth, maybe your view on, especially also from a global perspective, is with the G20 coming now, tighten the AML and KYC topic, etc. Maybe you can share what you see, what's the impact, maybe from a positive or from a negative point of view. I'd love to hear, because this is something that drives the business also, because it's heavy, it's getting more and more heavy regulated.
Yeah. So my company is, I don't know what kind of smaller percentage as Yoni's company, and 30% of my team is focused on compliance. I mean, when you told me that the BaFin is going to regulate, it's like such a startup buzzkill, right? I mean, it's reality, but it's such a pain and it's insane. We would never have had the boom in the past 1900s if we had this kind of stranglehold. We were talking backstage about how it takes me 13 documents to onboard, just onboard and register a business customer, and then an additional 4 to 5 documents per transaction. And I somehow have to make that as sexy as Apple Pay. And I think when you get into corporate or B2B, regulation is it's part of the game. And if you figure out how to do that, you're a winner, and then the playing field is thinned out. So we have clear regulation. The problem then is on when it comes into partnering with banks and corporates, the regulation doesn't seem to be translating into action, because a lot of the problems then the banks will say, I know you're licensed, but I'm still scared. Right? And I think every fintech hears this. You might be licensed, but I can't bank you, or I can't partner with you, or a customer says that. I think this is like this secret extra regulation that nobody talks about, where this like fear of penalties in this growing gray space. And I think as time goes on, we're now 5-6 years from the largest countries and markets making clear statements about this blockchain, but we're not seeing those kind of partnerships happen. And I think a lot of banks are still de-risking and getting rid of fintech clients. I hear over and over again, some of the largest European banks, even here at this conference, that have blockchain innovator hubs or startup hubs, still don't bank most of them. Or a lot of the tier 1 banks say they have just one blockchain client. So we don't see the regulation translating into practical partnerships in this space. And I think we're still at the same place we were 3 to 4 years ago on that. And that's scary.
Yoni, what's your take on the regulation?
First of all, I think regulation in general is a very good thing, especially in the crypto space, just because we've seen so much fraud, so much moral hazard, that my experience over the last 2.5 years in crypto is thank God for regulation. But I would also really wish there was one global regulator and giving simple rules, ideally in APIs, and that's it. Because the biggest problem is you got this fragmentation when you work with a lot of different countries, that regulators are extremely non-consistent. And that is the entire premise an opportunity of digital finance is to build a digital global infrastructure for entrepreneurs to build cool, awesome services to one another through technology. But if every regulator puts his own different sets of rules, it's very hard to scale, or it just takes much longer. But we're seeing regulators all around the world building fintech innovation hubs, getting more and more sort of people from sort of the entrepreneurship, computer science places into regulators. So it'll take time, but hopefully it'll get there. But it's also around politics, macro, etc. So complex.
And Martin, looking at your portfolio companies, that's a huge impact also on the speed of introducing new products and services?
I must say we are lucky that we are based in Germany because it's very progressive. It's the first country in the world where you could distribute securities to retail customers entirely on the blockchain, on open source blockchains, not private blockchains, open source blockchains. So for us, it's of course really good because we started the business 18 months ago and we see quite some inflow. I mean, the challenge is you don't find consensus between all the different governments. It's nearly impossible. So that there's certain tricks that you can work with. For instance, you can work with a non-custodial stack that the end user really owns the stuff themselves. Then it is not regulated and you can distribute globally. So we provide this and we have some customers that use it for the internationalization of the security tokens. But overall, I think it will take time. And at the moment, we are in a stage of proof of concepts. We just measure the return on investment on the blockchain in every country. And I think, yeah, we would be happy if there would be like one global regulator, but I think it's probably unlikely in the next 10 years.
By the way, EU 5th AML directive, also non-custodial wallets are to be regulated.
That's true, but for instance in the US you have FinCEN guidelines, and with FinCEN guidelines you can distribute still. Yeah. So we have customers in many countries, but you're right, there's more regulation coming. That's why we also have to probably more license still.
And you know, as a core banking provider in the cloud, that must be a day-to-day challenge for you too, no?
Well, of course, it's a day-to-day task, and you know, I fully agree with Yoni. I think you know AML and the KYC regulations that have kicked in generally have been beneficial, but the problem is, fully agree that there's regulatory arbitrage, and we really need to fix that because it's just not helpful towards the standards that you want to have for a KYC, for example. I mean, we've established our KYC service, and on the business KYC side, it's a 24-hour opening for an account where normal banks generally take 2 to 3 weeks. So again, a disruptive process that allows very efficiently to onboard clients. But if you have, you know, more than a couple of
foreign businesses too, or only German?
No, only German, because of the complexity with the UBOs, the ultimate beneficial owners. It can be very cumbersome. Yeah. But I think ultimately, you know, you look at it 5-10 years ahead. I think a digital identity, even for corporates, will become the standard. And you know, if you know, you might just supply a stick or you send a data file that will have all the details that are necessary to be filled for all of the regulators. And then it's a non-issue. Yeah. But you know, you need to be clean, and that is, you know, I think that is something that is really good.
Before we open up for questions from the audience, Martin, you know, can you share, you know, the sentiments in the investor community? Because I think there was a bullish market 2-3 years ago in investing in blockchain startups, etc. Yeah. That has changed dramatically. Maybe you can. Is it coming back, or how do you see the situation?
So you have two markets. One is the crypto market. It's pretty hot, very volatile. You can make a lot of money quick. I have to say I also invest a lot of crypto back in the day since 2014. And then there's the other market where you just use the blockchain as more efficient rails. Yeah. It's completely dependent on the asset. It's not dependent on necessarily purely the technology. Technology makes it more efficient in terms of distribution and maybe more open. But I think if you buy real estate on a centralized database or you buy it on a decentralized database, it's still the same asset.
And you see, you know, I was more thinking about venture capital and other institutional investors. You know, the VCs invested 2-3 years ago. Do you see still, or do you think they learned their lessons?
So we have three really large VCs in our cap table. So one is Notion from the UK, Partech from France, and Holzbring from Germany. Yeah. And the reason why they invested in us is because we are a normal company that uses blockchain to optimize certain things. So I think the most VCs are a little bit tired of the classical crypto talk that you had a couple of years ago. Yeah. There's still amazing investors in the US like Andreessen, for instance, also Sequoia, investing in pure crypto projects. But I would say that, yeah, 90% of the investors that were super excited about it, like 1 or 2 years ago, that now go more towards, hey, let's use blockchain as a technology similar to machine learning or AI.
Good. Can we open up for questions? I think we still have time for 1 or 2 questions from the audience. I think there. Do we have a mic? Yeah. Thank you.
Yes, I've got a question regarding the legal point of view. Legal. What is the use, I mean, of this blockchain technology in front of a court? Being a proof that something has been done. What's the situation in Europe about this validity in front of a court, on a pure legal point of view?
I mean, it really depends on the instance, right? If it's a real estate case, some of the things have already been discussed, or a payments case, contract law. Yeah, I mean, it depends as well. You know, traceability. We had famously Katie, who leads the Andreessen team, used to be a DOJ prosecutor, and she found the pseudonymity of Bitcoin transactions helpful when she was prosecuting the Silk Road case. So I think it really depends.
Let's assume I bought a house, part, I mean, 5% of the real estate stuff. Okay. How can I prove, and what will be the validity on court, saying, okay, I'm the real owner of this 5% of the real estate stuff?
So first of all, there's just an SPE buying this real estate, and you have a token on top that's just a derivative for the real registry, so to say. So kind of it's just a derivative, it's not the real ownership. I think eventually it changes the next couple of years in Europe that you have also real ownership and you can trade peer-to-peer. Like when I give you money, you have the money. The same could happen to real estate. But the laws are exactly the same. I think just the rails are a little bit different. So I think to see the major shift in terms of real estate, we have to probably put in the land registry on the blockchain as well. Yeah. And I don't think this will happen in the next 1 to 2 years. But there are some ideas in Germany, Bavaria, where you play around with these kind of things. But then it gets exciting, and then you actually represent it's also purely digital. Today, there are 2 systems, an off-chain and on-chain system, and the off-chain system is the dominant one.
Yeah. Good. That was a good question. Do we have other questions from the audience? We have a microphone here if somebody likes to grab the microphone. Can't see. So.
I've got another question regarding central bank digital currency. I mean, what do you think about this? This morning, the governor of Banque de France said that they are going to start this central bank digital currency this year for wholesale purposes. What's your point of view about this?
So digitizing money in general is an inevitable process, right? So we use cash. And it's quite obvious that, at least for me, I'll be very surprised if my kids in 20 years from now will still use cash. I have more certainty that they'll have some Bitcoin that I saved from them than cash. So the digitization process, it's very clear it's coming. And now we have a name for it, central bank digital currency. That's the process of digitization of central bank money. Now, how exactly does it look like? I think there are a lot of open questions, which is why we haven't seen yet anyone really publish a complete paper of how will it look like. The biggest question is it open to retail consumers directly to the central bank, which is a very big paradigm shift, or is it just a more efficient Federal Reserve System where you have different banks who have access, or like the system in the UK, which is a bit different, and you have this federated system of people who have access to a blockchain?
If I just add two bits, I think there's an opportunity right now for the central banks to capture that space. And if they don't do it, somebody else will. Yeah. And you saw it with Libra, you know, and of course, immediately that triggered a lot of comments. So either they will take that space or somebody else will.
And I think we've seen e-money, so e-money systems be very successful in some places around the world, specifically in emerging markets, Southeast Asia, South America, Africa. And so there's a question of, why do we need to have digital currency? We already have a domestic digital currency. Nobody really touches cash anymore. But the question then becomes, how do you move between those digitized domestic systems? Let's say everybody uses, an Apple Pay or their sunglasses, check them out at a cashier in 10 years, but how do you then transfer value between those systems, between Asia and Europe, between Europe and North America? And then I think we're talking about intermediary digital currencies, which becomes very cool. And then we have the option of going to like a Facebook or an Amazon coin, or we're creating regional currencies. And that's exciting because that allows hopefully new entrants to come in.
I think it's also about capital formation. So think about 10 years from now, a small country in Africa raising money, offering 8% fixed income to the 8 billion people around the world, for basically lending them money to give them that 8%. That's how they're raising money from the public. So that's really eventually where it might go. And I'll give you my microphone.
Final statement. Thank you so much, Ioni. I think, as you can see, these are the hot topics: digital currencies. Now the central governments central banks are coming in. The establishment of digital asset regulated business that needs new infrastructure. There are new digital exchanges on the new incoming, and then also the startups building, needing also a license for doing that. There is a need for liquidity at the end, which I think will be something more 21, 22. On the crypto market, maybe we will see another rally coming up with the changes in maybe with Bitcoin. And regulation heavily impacting our business here, tighten the regulation, especially from AML KYC topic, which makes our business life not more easier. But I think you can see this is a topic across the different stakeholders in our community, and I want to thank the panel for all the insights and the prediction, etc. And I would like to ask you to give them a big round of applause. Thank you.